Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to use our MTP-RT add-ons for NinjaTrader 7, which is what you can see here, to have a look at how the USE minis unfolded yesterday. I particularly want to do this because yesterday was actually quite a hard day, and just using the standard MTPredictor trade setups there would have been quite a few losing trades. Again, there's very few gurus who will actually look at hard days and losing trades because they always want to show the best in the software. However, at MTPredictor we're all traders here, so we want to show you the good, the bad and the ugly as the film goes, to make sure that you understand that there always will be harder times when trading. It just gives you a fairer picture of how the markets really unfold. So let's have a look at how yesterday unfolded just on the standard MTPredictor trade setups and guidelines. This is a 3-minute chart of the ES. You can see market basically went sideways. There were no automatic setups at all here, so a very quiet day on the ES. I then want to go across to the NQ. Now this is where I want to look at some of our losing trades and show you actually that even though MTPredictor can have losing trades, it doesn't mean to say you lose at the end of the day overall. And this is a great example of how correct position sizing, which is a core part of our MTPredictor software and has been for many years now, can help out. Can you see these history triangles, these little triangles here? These are where we had an automatic setup at the time. The market was then filled and then stopped out for a -1 hour loss. So let's have a look at this one here. The STF was red at this time, therefore it was a downtrend. So it was a standard MTPredictor trade setup. So we right mouse click on the bar. We can then place the analysis on this setup, and you can see it was a TS1 sell setup at the time. The market then would have taken you in just literally by one tick, so it would have been debatable whether you'd have actually got filled on that. But let's just look at this in the worst case scenario. Again, there are very few gurus who will actually do that, but it's always a good exercise to do. So let's assume this was a losing trade. Remember, we use correct position sizing to vary our number of lots, contracts or shares to keep our initial risk small and under control. So this would have been what we call a -1 hour loss, in other words, one risk unit. You then go up to here, STF is black, therefore standard trade setup, we can do exactly the same again, and as you can see this would have been another short trade. Again, number of lots, contracts or shares are varied to keep your initial risk small and under control. In this case, less than 2% of a sample $20,000 account. Again, taking you in on a short trade, this time stopping you out a few bars later. So -2R would have been at this stage. Again, our initial risks are kept small, so it's one risk unit. Here's another setup here. You can see that we don't hide these. These are all shown by our history triangles. We place the analysis on, another short trade, another losing trade. So by this stage it would have been really hard work. You'd have actually had 3 trades and 3 losing trades, so you'd have been 3R down. Now in most sort of standard ways of trading, that would have been sort of the end for you, because most standard amateur trade, or most amateur traders tend to have large losses and small profits, therefore they never can recover from something like that. However, if I clear the chart off, you can see we had another sell setup here which actually nailed the very high of the day, which was obviously a nice situation to be in. STF was black, therefore you could take this, but this is the great example of position sizing. If I place the analysis on here, again our number of contracts or lots or shares are varied to keep the initial risk constant. But look at this, market goes down, hits our first target. STF was what we call weak because it was less than our grey band here, and just look at this, the profit was actually 3.2 times the initial risk, or 3R. And that's what is so important about using position sizing, because even though you'd made 1, 2, 3 losing trades before and been -3R down, this single trade here put you back into profit and actually put you 0.2R back in. In other words, the profit is large, and so large that it actually cleared the last 3 losing trades. And that is the whole key to successful trading, and this is what most professional traders do, is that when they're wrong the losses are kept small, but when they're right the profits are large, so it wipes out loads of other losses and moves you forward. Now I'm not saying that MTPredictor always has days like this, but I'm deliberately showing you what I consider to be a bad day and show you lots of losing trades like this, just to show you that when you're using position sizing how it helps overall. So a great example there of 1, 2, 3 losing trades and only 1 profitable trade, but you actually end the day with actually a small profit. Now that's what professional trading is all about. If I look at the YM, which was the last one we look at, there was actually a history triangle here, but this was the same time as one of the trades on the NQ, so you wouldn't be taking this because you wouldn't be doubling up on your initial risk. If you get two setups on 2 or 3 of the E-minis at the same time, you don't all take them because they're correlated markets. In other words, you don't double up on your risk, so you wouldn't have taken this one. However, there was a TS1 sell here a bit later in the day. STF is black. You'd have actually come in on this bar here, because this first one, if I place the analysis on, you can see we only have 1.9R profit going down to our first target, and we normally like to have at least 2R profit. So the red sell bar that would have actually triggered your short trade would actually be this one here, because we're allowed to have our red sell bar a couple of bars or a few bars after the turn, and there it would have been there. So you'd have actually been short at this particular point in time down to the first target, and again, can you see how the profits are large in relation to the initial risks? Here the profit would have been approximately 3 times the initial risk. So on the NQ, just taking the standard setup, you'd have had 3 losing trades, 1 profitable trade for basically break even or small profit. Then suddenly on the YM here, you'd have had a nice 3.2R profit. So even though it was a very hard day, and overall on the 3 ESU minis, you'd have had 5 trades, 3 losers and 2 profits. In other words, you'd have actually had more losing trades than you would have had winners. You'd have actually coming out with a profit at the end of the day. So this just shows you the power of position sizing and why it's the fundamental part of MTPredictor. Just out of interest, if you had thought this was a holy grail trade setup, and you had thought it was going to go down into your typical wave 3 WPT down here, let's just place the analysis on there. I just want to quickly show you, I'd like to quickly show you what I was talking about in yesterday's training webinar, that we actually follow the market as it's unfolding just to confirm or invalidate your initial opinion. So if you had assumed, or you were playing for our holy grail target, which is our typical wave 3 WPT down here, which would have been a nice profit, I just want to show you how this particular swing down here unfolded. If I come down to the pivot low, I right mouse click and I do Elliott wave minor, can you see how this swing here actually unfolded as a 1, 2, 3, 4, 5 with the low at our minimum wave 5 WPT. So this means that a 5-wave sequence is a trend termination sequence, so odds on the market was then ending its decline down here. So how did that help you if you're an advanced trader? Well, rather than trying to stick for coming all the way down here, what you probably would have done is as you reach the minimum wave 5 WPT, which was this level here, you'd have started to trail your stop just above the bar highs. That's just the easy way of doing it. So if you'd done that, then you'd probably been stopped out just above this bar high here, so you'd have locked in a nice 5R profit, which was very, very nice indeed. For those of you who have our trade module for the MTPredictor RT add-ons for NinjaTrader 7, this will be very easy indeed, because as the market then came down here into the wave 5 WPT, you can just click on this button here which says bar, and what it does is change your protective stop to just move 1 tick above the bar highs. So using the trade module here would have made it very easy to manage this trade and would have stopped you out for a lovely 5R profit. So hopefully this has been a good example of showing MTPredictor on a day that I consider to be a hard day, particularly when we had quite a lot of losing trades on the NQ, and just particularly showing you how even if you have more losing trades than winners, because the losses are kept small at -1R and our profits are kept large, you can actually end up making money overall. And this is what professional traders do, and why it's the core, why position sizing is at the core of MTPredictor. Then also, just for more advanced traders, coming onto the YM, and well, first of all, a nice short trade we had into that minimum wave C for another 3R profit. But if you were looking to be a bit more of an advanced trader and running it a bit further, how you can use some of the other tools in the software to help manage your trade, and as a result have a very, very nice profit. So overall, a hard day for the markets, but actually a good day for MTPredictor yesterday on the USE minis.